Today, we're diving into the much-anticipated Pine Labs IPO. As a leading fintech and commerce technology platform, Pine Labs is making headlines with its upcoming public offering. In this video, we'll break down their business model, revenue streams, industry growth, and the critical risks you need to know before considering this IPO. Whether you're an investor or just curious about the fintech space, this analysis will give you a comprehensive overview of what Pine Labs brings to the table and what challenges it faces. Pine Labs operates at the intersection of fintech and commerce technology. Their core mission is to build digital infrastructure that powers payments, gift cards, and credit solutions for merchants, brands, and banks. By providing these essential services, Pine Labs helps businesses streamline transactions and offer more value to their customers. Their platform is trusted by major clients like ICICI, HDFC, SBI, Amazon, Starbucks, DMart, and Chroma, though these partnerships are non-exclusive. First major business segment is Pine Labs, digital infrastructure and transaction platform. This includes in-store payments through POS machines, which you might spot at your local coffee shop, and online payments that power e-commerce transactions, including those on Amazon via select gateways. They also offer affordability solutions like EMI and Buy Now, Pay Later at checkout, plus value-added services such as cashback, loyalty programs, invoicing, and GST tools. Second business segment focuses on issuing and acquiring platforms. Pine Labs issues gift and prepaid cards, such as the full lifecycle of Amazon gift cards, and handles card issuance and processing for various clients. They also help banks acquire new merchants, expanding their reach in the payments ecosystem. This segment is crucial for enabling seamless transactions and supporting the broader financial infrastructure. Pine Labs boasts a robust client list, including top banks like ICICI, HDFC, and SBI, as well as retail giants such as Amazon, Starbucks, DMart, and Chroma. These partnerships, while non-exclusive, demonstrate the trust and scale Pine Labs has achieved in the market. Their technology powers transactions for over 10 lakh merchants, 716 brands, and 177 financial institutions, highlighting their significant footprint in the payments industry. Pine Labs generates revenue through multiple streams. They charge a subscription fee for POS machines, a transaction fee ranging from 0.5% to 2.5% for each swipe or online payment, and a processing fee for EMI and BNPL services. Additionally, they collect API and SaaS fees from banks and fintechs, and earn card issuance fees. This diversified revenue model helps Pine Labs capture value across different points in the payment ecosystem. Pine Labs is primarily focused on the Indian market, with 85% of its business coming from India. It also has a growing international presence, accounting for 15% of its operations. This geographic split allows Pine Labs to leverage India's booming digital payments sector while exploring opportunities abroad. Their extensive client base includes a wide variety of merchants, brands, and financial institutions. Let's look at some key performance indicators. Pine Labs' gross transaction value, GTV, is projected to triple from $4,397 billion in FY23 to $11,434 billion in FY25. The number of transactions is expected to more than double, and the merchant base is set to grow from 530,000 to 954,000. Revenue is forecasted to rise from 15,000 million to 22,000 million, reflecting a healthy CAGR of 17.33%. The business segment split is 70% infrastructure and 30% issuing. Digital payments industry is experiencing rapid growth. In India, the sector is expected to grow at a CAGR of 22-24%, while international markets are projected to expand at 10-11% CAGR. This robust industry growth provides a strong tailwind for Pine Labs, positioning it well to capture increasing transaction volumes and merchant adoption in the coming years. Despite impressive growth metrics, Pine Labs has faced persistent financial challenges. The company has reported losses for 3 consecutive years, with expenses exceeding revenue by 104%. Operational cash flows have been negative in FY23 and FY24, raising concerns about sustainability. The company's red herring prospectus, RHP, explicitly warns that there's no assurance of future profitability or positive cash flows. Another critical risk is revenue concentration. Pine Labs relies heavily on its top 10 clients, who contribute around 30% of total revenue. This concentration exposes the company to potential volatility if any major client reduces or ends their partnership. Diversifying the client base will be essential for Pine Labs to mitigate this risk and ensure more stable revenue streams. Let's compare Pine Labs with its peers, PTM and Zaggle. While Pine Labs reported revenue of 22,000 million, PTM leads with 69,000 million, and Zaggle trails at around 11,000 million. However, both Pine Labs and PTM are loss-making, while Zaggle is profitable. Key metrics like EPS and ROE are negative for Pine Labs and PTM, but positive for Zaggle. Notably, PE ratios aren't applicable due to the lack of earnings. Profitability remains a challenge for Pine Labs. With negative earnings per share, EPS, and return on net worth, ROE, the company lags behind profitable peers like Zaggle. This underlines the importance of monitoring future financial performance and the company's ability to turn its rapid growth into sustainable profits. Now, let's get into the IPO specifics. The Pine Labs IPO is scheduled for November 7th to 11th, with a price band set between Rupee 210 and Rupee 221 per share. The total issue size is approximately 3,900 crore, split between 51% fresh issue and 49% offer for sale, OFS. This structure allows the company to raise new capital while providing an exit for existing shareholders. The fresh issue portion, amounting to around 2,000 crore, will be used for IT and cloud infrastructure upgrades, expanding digital checkout points, DCPs, and repaying loans. These investments are aimed at strengthening Pine Labs' technology backbone and supporting future growth initiatives. Pine Labs is well positioned in a high-growth sector, driven by the rapid adoption of digital payments and increasing demand for fintech solutions. Their diversified product offerings, strong client relationships, and focus on innovation are key drivers that could help the company capture more market share and scale its operations. Despite its strengths, Pine Labs faces significant risks. Persistent losses, negative operational cash flows, and high revenue concentration are major concerns. Additionally, the company's own RHP warns that there's no guarantee of future profitability or positive cash flows, making it a riskier bet compared to some peers. The broader fintech and payments industry is evolving rapidly, with new technologies and business models emerging every year. Pine Labs' ability to stay ahead of these trends, adapt to regulatory changes, and innovate will be crucial for its long-term success. The company's focus on digital infrastructure positions it well to benefit from ongoing industry transformation. Potential investors, it's important to weigh the company's strong growth prospects against its financial risks. While Pine Labs operates in a booming sector and has a solid client base, the lack of profitability and negative cash flows are red flags. Investors should carefully consider their risk tolerance and investment horizon before making any decisions. Sum up, Pine Labs is a strong player in a high-growth industry, offering essential digital payment solutions to a wide range of clients. However, persistent losses, negative cash flows, and explicit warnings in the RHP mean that caution is warranted. This IPO offers exposure to the fintech sector's growth, but it's not without its risks. Always do your own research and consult financial experts before making investment decisions. This video is intended for educational purposes only and should not be considered investment advice. The information presented is based on publicly available data and is meant to help viewers understand the key aspects of the Pine Labs IPO. Always consult with a qualified financial advisor before making any investment decisions.